So one of the terms we would want to go over then is it's called A&D money, acquisition and development money, or capital. And that's a specific kind of loan that banks definitely do, right? Well, if a builder needs money to buy land and develop it and get it all the way to permit, right? That's an A&D loan, and banks can do that. But if you're new and you're going to go in and say, I need A&D money, I need $4 million for this 20-acre piece, you're not getting that loan. You typically have to have a relationship with that bank and a track record before they're willing to cough up some A&D money. And beyond then, you need to go hard money.
Or you might need to have some cash in the bank or some assets or cash.
Yeah.
Yes.
In your bank account.
They want to see that. Yeah, they want that risk to go away and know that they're well collateralized.
Yeah.
A&D money, these guys just do it for vertical. So private investors come to them and say, here's $300,000 from my IRA. And then the fund goes out and finds builders that have land that's ready to go and they need capital to go vertical with, right? So you could find a company like that specializes in vertical financing. Why do you think, because that vertical financing is going to be more expensive. Why would somebody go the more expensive route? Then why don't they just go down to First Bank of Arizona?
It's a good question.
Yeah. I mean, usually it's because they don't have the funds behind it to back it. I mean,
Well, so the terms at the bank are better, but the qualifications are much more stringent. Is that what you're saying?
Yeah, there's no way they're going to qualify. So if I know that, I could go get some hard money, because some of these hard money people are going to, or a fund, if you will, they're going to be more willing to loan to you, knowing they're in first position, because they can take over the piece of dirt or land, whatever you're trying to develop, right? Some of these banks, they're not in that market to go do that. They don't want to do that. But yeah, the qualifications are going to be a lot higher and more stringent.
Yeah, they're going to ask you a lot of stupid questions, go through all your paperwork. And I would add, though, that the hard money is going to still ask a lot of those questions.
Oh, 100%.
Yeah.
Mm-hmm.
But they can typically move a lot faster. You know, a bank is going to, they can't go to the bathroom in less than 30 days, let alone do an A&D loan. Like when we do our stuff for FIG, the Fourplex Investment Group, Aaron in our company has a whole bunch of individuals he goes to, and he created a fund that only loans money on a FIG deal, right? And the way that gets handled is they record a mortgage against the entire property. And then when our investors come in and start closing on fourplexes, that A&D capital gradually gets paid down until it's paid off. And that's a great way to minimize the capital that we have to have into the deal. But once again, a normal bank, that's not going to fly. They're going to want to see equity in the deal, right? Mm-hmm. So there's creative ways to do it. Okay, so that's A&D money.
Thanks for listening to the Build to Rent podcast. You are now just a few clicks away from joining our community of Build to Rent investors. All you have to do is follow our show on Facebook, LinkedIn, or wherever you're listening to this podcast. You can also watch this episode and more by subscribing to the Build to Rent podcast on YouTube.